there's been a lot of activity in the last couple of weeks surrounding FHA mortgages and all the people who are in forbearances, who have FHA or who have defaulted on FHA mortgages or who are imminently in threat of defaulting. Now, the government has passed a sweeping new government loan modification program for FHA. I've been reviewing these documents and I've come up with a simple way to understand what's going on with FHA and if you qualify, if you have these type of mortgages, and what you can do to get yourself out of a foreclosure situation, out of a default, or come out of forbearance with a mortgage that's more affordable and that you're more likely to be able to pay. Now, I'm gonna do a two-part series on this because there's so much information that I couldn't fit in all of it into a short YouTube video. So I'm gonna do part one today, and tomorrow you're gonna get part two, and you can watch both of them and you can get the full picture as to what's going on with FHA. So, there are new FHA post-forbearance programs that we're going to talk about and how you qualify and what you can do to get these programs and get loan modification money and other types of government assistance so that you can pay your mortgages. Now, these new programs were instituted on July 23rd. The banks have 90 days to come up with how they're going to deal with the millions and millions of homeowners with FHA mortgages who are asking for government assistance. Now, what these banks need to do is, first of all, implement the partial claim program, which has been in existence before, but now is getting hotter because a lot of people are coming out of forbearance. They need to figure out how to reinstate defaulted mortgages with FHA and do a minimum of a 20% reduction in principal and interest payment on the mortgages that are coming out of forbearance and for people who have defaulted and who cannot continue to pay. So the government right now is working with these banks to come up with how they're going to be able to do this. So you might be calling your bank today and they might not be ready to talk to you, but they have 90 days. So we're talking about July, August, September, October. So they have until October. I would imagine that most of these banks are going to get their stuff together and they're going to figure out how to implement these FHA, new FHA programs before them, because a lot of people are coming out of forbearance at the end of September. So the time to do that is now. Now, we're going to talk about all this stuff in a minute, but before we get to that, what I want from you is to please like my video, and not only like it, but subscribe to my channel and turn on the notifications, because these programs appear one day to the next, it seems, and they change. They're constantly changing. And what I promise that as these programs change, I will be the one that probably tells you about these changes, and I will explain to you the best way I can with somebody who has 13 years of experience dealing with these type of mortgages and these loan modification programs. As somebody who has done this before, I promise that my channel, I will give you the best information that I can so that you are informed and you're able to take advantage of any program that you might be qualified for. So again, my name is Diego Mendez. My channel is Debt Law, Survival Guide for the Desperate Debtor. Give me 10 seconds and we're going to get into all the FHA changes. Now, the question that I'm getting, which is kind of an obvious question, but you know, if you don't know, you don't know, and you shouldn't be ashamed to ask something you don't know, is, am I FHA? We seem to think that everybody just knows what the government entity is that backs your mortgage. Now, you don't get a bill from FHA, just like you don't get a bill from Fannie Mae or USDA or VA or any of these things. This is basically an entity that is behind the servicer. The servicer is the bank that services your loan. They're the ones that give you your bills and you pay them. So you're not getting any letters directly from FHA. However, you might still be an FHA mortgage. Now, how do you know if you're an FHA mortgage? Now, if you're really, really good at mortgages, which some people are, but not everybody is, then you can go back and you can look at your mortgage documents. You can look at the original documents that you signed. If it references FHA and you haven't refinanced since then you're an FHA. The other thing is to look at letters that you received from HUD, because government letters that reference FHA, and if they say you're an FHA mortgage, then you probably are an FHA mortgage. The other way is if you're paying PMI. Now, PMI is not all FHA mortgages have PMI, and some other mortgages have PMI, but a lot of people who have PMI are FHA. So you might, if you're paying a PMI, you might be an FHA. Remember, when you also think back and remember when you bought the house, if you remember saying, I got to put down 3.5%, 3.5% is the magic number for most people on the down payment requirement for an FHA. So if you remember talking about that with your family and friends, you might be an FHA. Now, the last thing that you can do is pick up the phone and ask your lender. A lot of people don't like to do that, especially if you're in default, because they're gonna ask you to pay and it's embarrassing and all that. But if you really wanna know, you do have the right to ask, and they will tell you. And all you have to do is this an FHA loan? That's the only question you have to ask them. You don't have to ask them anything else. You don't have to promise to pay anything. You don't have to do anything, just ask. And if you are an FHA, they're gonna wanna talk to you about a million things, which you might want to talk to them about, but at least you know that what you're dealing with is an FHA mortgage. Now, the next thing we wanna talk about, and this is a big split into what you can apply for if you have an FHA mortgage, is if you're late or if you're current. Now, in law school, we learned something called term of art, meaning that these words actually mean something different than what they normally mean in normal conversation. So, for FHA, we're going to talk about what it means to be late and what it means to be current. Now, when I say late, what I mean is that you are not necessarily in forbearance. And being in forbearance doesn't mean you're late. You could be 18 months in forbearance and still be current. What I mean by late is that you were in default, or you had missed payments either before you started your forbearance or after you've come off of forbearance. So let's say that when you started forbearance, you were 90 days, 120 days or more late, but they still let you have a forbearance on the term from the forbearance period till now. You would be considered late for the purposes of FHA. That's the same thing. If you came off of forbearance, let's say in April of this year, and you weren't able to pay your mortgage and you defaulted again, you fell behind, then you would also be considered late. Now, the magic number for being late for these government assistance programs is 90 days. 90 days is the magic number to get automatic assistance. So, if you were late more than 90 days or more, then you get automatic assistance from the government if you have FHA. So you need to know if you're late or not. The next thing is if you're current. So what does that mean? That means that you were current when you took the forbearance. Let's say you took the forbearance in March of 2020 and you had paid your February payment in 2020, and then COVID happened and you took the forbearance, then you would be considered current. So if you did that, you came off of or you're coming off of forbearance now, you are considered current. The other people who are current are people who are in forbearance right now. If you're in forbearance right now, you are considered current for the purposes of loan modifications and the different things that FHA can offer you. So you need to understand that when they ask you or when they tell you you're current, this is what they mean. Now, this last group of people is the unfortunate, because these are the people that never took forbearance and who kept paying. You are considered current. The problem is that you're not eligible for any of these programs unless you're in threat of imminent default. If you're threat of imminent default, that is a fact-based question that requires you to prove that to the bank. What that means is that, yeah, you made, let's see, we're in August, you made your August payment, but you're not going to be able to make your September payment. That's very difficult to prove. I've actually never seen anybody be able to do that, but it's there. So it's possible that you could be in imminent default and get into one of these loan modification programs. I'm not saying that it's impossible. I'm just saying that it's better. And I'm not telling you to stop paying your mortgage. And I have a whole video on this about strategic default and different things on if you should stop paying on purpose and all that. Don't do that, because then it's you're in a bigger problem. But if you're in a situation that you're in imminent default, you can ask them And you're gonna have to prove it, meaning that if you just lost your job, maybe that's the way to prove it. But if you have your current job, then it's gonna be very difficult to prove that you're in imminent default. So bottom line, these are the people that can get assistance. FHA, if you have an FHA mortgage and you're 90 days late, you're gonna get assistance. If you're an FHA in your forbearance and you cannot pay your mortgage, that's very important. If you tell them I cannot pay my mortgage, then you're in a position to get something from FHA. If you're an FHA and you are in the process of leaving forbearance and you tell them that you cannot pay your mortgage, then you would qualify for some of these loan modification programs. If you are in FHA, you're current, and you are in imminent default, which we talked about, which is very difficult to prove, but it's provable in some situations, then you possibly have a chance. Now, this last group, which is really strange, is all FHA non-owner occupied mortgages have the ability to apply for a loan modification, even though it is document based, which means that you need to produce documents to be able to get that. We're gonna talk about all these things in the next video, which I promise is only gonna be tomorrow. I'm not gonna make you wait a week. I'm only gonna make you wait 24 hours. So make sure that, like I said, that you put on your notification so you know when the next one comes, because in the next one, I'm gonna get more into each of these programs and what you need to do to qualify. But for now, you need to understand where you are. Your status determines if you are late, not late, what you can qualify for, what you can't. It's very important. FHA is very specific. That's how they did it. Again, my name is Diego Mendez. I'm a bankruptcy loan modification and foreclosure lawyer here in Miami, Florida. Keep watching my channel, Debt Law, Survival Guide for the Desperate Debtor, because I'm going to keep talking about these subjects, and I'm going to keep talking about FHA, the different mortgages that exist, and the different loan modifications programs that exist for people that are coming out of forbearance and who are unable to pay their bills. Thank you very much.